5 ways to stop losing money with stock trading programs. 1. Buying or selling against the strong trend is never a smart idea. Most investors are amazed at their terrible results because they try to buy stocks on the way down, or they sell stocks on the way up. If a stock is a bargain at $75, it must be even better at $60, right? Not necessarily so. See, all the fundamental data is factored into the price. All the earnings, and geopolitical and economic factors are all distilled into one magic price, and that is the price of the stock at this current time. So if I can buy a stock $5 cheaper, is that a good deal? Not really. The other thing to think about is that when a stock is moving up or down, it has what we call momentum. We never know how far up or down the stock will go. Pivot points, Fibonacci lines are nice, but there is no law that says that price has to obey these laws. The secret to trading is realizing that all the indicators in the world, or even the chart for that matter, is only showing you what has happened. As the stockbrokers are readily right in their disclaimers, past performance is not an indicator of future gains. See, we don't know what will happen in the next day, hour, or 30 seconds. That is reality, and I feel that when most traders can come to terms with this fact, that can start becoming profitable. 2. Wanting huge profits from the market with tiny capital is the second mistake why people lose money with stock trading programs. Trying to make that quick buck could cost you a fortune. Having to put the time is what going to make you successful in the long run. Trading is no different than any other profession. When you rely solely on a system, what happens when you lose is that you get scared, and after you take a few nasty losses you start to doubt yourself. After you doubt yourself, your confidence goes down the toilet, and then if you don't have a really good support structure at home or at work, it could affect your whole life. This is just part of being human. Truly preposterous to think that you can take your emotions out of trading. 3. Trading is not a sport or a hobby. Trying to equate trading to a hobby is like saying war is just a misunderstanding. When you come to the market, there has to be a sense of seriousness, almost a reverence. You are competing with the most highly intelligent and well-funded individuals and organizations on the planet. That is not something to be taken lightly. If you are not serious and see this as a casual game, they will take your ice cream and kick you in the teeth. It's not giving into the negative energy, but knowing what the environment you are operating is a key to know how to navigate it successfully and can actually be profitable. 4. Stock trading programs and other trading programs don't address the counterintuitive nature of the markets. This is done by design. They know with precision what people tend to do when they are buying or selling in a market, and they wait for certain physiological points to move the market one way or the other if the general tendency is feeling scared or greedy. It truly is amazing, because if you follow price action on a chart you can tell. The other thing that these stock trading programs and peddlers don't tell you, that even if their program doesn't work, if enough people use them, then it could affect the market and they could take opposite positions or notice by where the most of the people enter the market which program they are using and exploit them. Yes, it is a dirty game, but they will do almost anything to win, even sell programs letting you think you have an edge when all the while you are setting them up for a good position to take your money. So be careful. What comes to my mind so vividly is when on March 11, 2008, CNBC's Jim Cramer was reading a letter from Peter that asked, should I be worried about Bear Stearns BSC in terms of liquidity and get my money out of there? Mr. Cramer's reply was no, Bear Stearns is fine, do not take your money. If there is one takeaway, Bear Stearns is not in trouble. They are more likely they are going to be taken over. Don't move your money from Bear. That's just silly. Don't be silly. His comment was made when Bear was still trading over $60 a share. It was down from a high of $171 just a year ago. Amazingly enough, 5 days before Bear Stearns sold to JP Morgan for $2 a share, in a federal brokered bailout. So here is a perfect example of a fool enticing people to stay on a Titanic so he can jump off first. I can't verify this, and this is just pure speculation. Mr. Cramer is no dummy though, and he knows what he's doing. It wouldn't surprise me in the slightest if he bought puts, took positions hoping everyone would lose their money, so he would make a lot of money by the stock crashing. If that were the case, he would have made a fortune, because there are millions of people who listen to him, and he would have had an opportunity to jump in the market in the opposite direction of the crowd, and persuade them long enough for him to take a big position. Again, this may have not been the case, and maybe Mr. Kramer is ethical and didn't use his position of highly influencing millions of people on television who followed his stock recommendations to profit for himself. It would be interesting to see what the volume of puts and other sellers who were dumping bear stearns before the collapse were doing. I am sure that would be very interesting indeed. I think because of this, and so many other similar events, it's time to demand full transparency. The takeaway: all markets are manipulated. Yes, that might be a big shock to you. I say to you, prove me wrong. When something as horrible happens like Bear, ask yourself this question. If I were the CEO of Bear Stearns, what side of the trade would I want to be on? Would I want to lose my full life savings? Or would I rather make a fortune? The answer to this question is where you will find yours. 5. Feel the fear and act in spite of it is the only way to be a great trader. Looking back in history, you can see that some of the best trades would have been when you bought or sold at the most terrifying places. This is where the market corrected majorly. If you are afraid of buying a stock when it's breaking new highs or selling when stocks are making new lows, the probability of you staying in this game is going to be relatively short. So there you have it. I wanted to share with you some things that happened in the stock market and other markets that most people are not even aware of. My intention was to share information that isn't already very widely distributed or known. I am sure that if I shared what you already knew, it wouldn't have so much value and would be like everyone else.